All right, we are live, Facebook Live. Sandra the Beast Cardenas here with us today. Excited?
Hi, everybody.
All right, so what we're gonna do is we see that people generally come on about a minute or so after. So we're gonna put a little bit of some tunes there for you, so you can we can wait for them to come in, and then we'll start. We're gonna be covering the 6 mistakes that first-time home buyers generally make. So relax for a little bit. We'll be back. There you go. All right, so it's about a minute in. Let's lower that there a little bit. All right, so let's get into this, Sandra. First-time home buyers. I think the month of January. You good? You ready?
Yeah, I was like, oh, wait.
Yeah.
I'm ready.
Month of January, we've dedicated it basically to first-time home buyers, right? We are working with a lot of you guys, especially coming around now with tax season. We know that you guys are going to have some money in your pockets, and it makes life, getting your money together for your down payment so much easier when you know you have a couple $1,000s coming your way, right?
Absolutely.
So I was talking to Sandra earlier this week, and there was a couple of questions that came out throughout the week, and it's just basic questions. And these are going to be basically statements, because it's the 6 things that we see that first-time home buyers generally make mistakes on, okay? So we'll start with number 1, right? And I'm gonna throw this one at you, Sandra. So number 1, they tend to assume that they just cannot get approved for a mortgage. So they tell their friend that has some past history with you, or maybe with me on the lender side, and then they're like, well, my cousin says he doesn't think that he can get approved. So do you have a story of someone that thought they couldn't get approved? They put in the application after you had to convince him for 30 minutes. And then that at the end of the day, you got him into the home.
Oh, it happens all the time. I mean, I don't have a specific story. It just tends to happen within first-time home buyers. They're scared of the process. They don't think they qualify because they make $10, $12 an hour and their spouse makes the same. So they think that because they don't make a lot, but they don't realize that they probably don't hold a lot of debt. So they're able to actually afford something. And most of the time they're not educated enough to know, and they'll think most of the time that they're required to put a 20% down payment in order to even qualify. And so they're not even sure how the programs work in the market. So just letting them know that there's a small down payment option, like already is a huge relief when you're speaking to them. And then once you kind of ask a little bit of those trigger questions, like what's your credit like, or what do you think your credit's at? And most of them think that because they're like 580, 590, there's nothing we can do. And that's absolutely not true either. So I love those. Those are my favorite clients.
100%. And you brought up something that's, I mean, it touches a place in my heart. As you know, I've always been marketing myself as the VA geek, and I really want to focus on veterans. And obviously we do first-time home buyers. As a team, we do conventional. We do every kind of loan product that you could find out there. But you brought up the credit score. 580, 590. We've had veterans come to both you and I and say, you know what, I wish I can get a home, but I just, I think I'm in the high fives and I can't get a home. Not at all.
I had one of those this morning. My trainer, he's a veteran, discharged, honorably discharged. He's 10% disabled, so it turns out he didn't even know that he'd like waived a funding fee, and he was like, "Wait, what?" He's like, "I can get in without money?" Like, I was like, "Yeah." So he didn't even know.
100%, right? So as long as we can basically get what we call a DU approval, which is a back-end system that we have that kind of says whether it's going to be approved or not. As long as we get a DU approval with a veteran, I mean, I've seen as low as what, 500, 510. We've seen them come through, and obviously it's a tough one, but they get through. Besides that, right? You talked about 20%. A lot of people are under the impression that the option will still be, let's say, only a 3.5%, right? There's still products out there, let's say like Home Possible, Home Ready, that we can structure something that would be pretty lucrative, right? It would be even less than that.
Way less. And we're talking like Home Possible, Home Ready. We're talking mortgage insurance benefits better than. Can you tell me for 1 second? I'm doing a video.
At least let's say hi.
Sorry.
Hi. That works.
Sorry for the interruption. Okay, my client came in 30 minutes late, so this is what happened. What were we talking about again, Freddie?
Yeah.
Home Ready and Home Possible. Okay, so sometimes we can get them in 3%, sometimes, and then our mortgage insurance is a lot more competitive than a regular conventional loan with 5% down. So that's actually options that the borrower doesn't even know that are out there. And that's what has created Fannie and Freddie have created those programs in order to compete with the FHA programs.
Exactly. Now, quick shout out to Patricia Concepcion. She's actually one of my realtors down here, and she has a great story because she had a client that was rougher on the credit side. She ended up coming on board working with us. The lender on their side told them, hey, you know what? We're not going to get it done. Patricia calls me, hey, Freddie, listen, I got to get this thing done within the next 3 weeks. It's a little bit rough. We don't got a lot of money, but we need to make it happen. Guess what? We used exactly that product. We used Home Possible. We were able to get her, I think, close with maybe $2,000 or $3,000, if I remember correctly. I mean, going from thinking you have to spend $15,000 to $20,000 to get into a home to knowing that you have $2,000 in the bank and you can get it into a home. I mean, that's ginormous. You know, you're actually now fulfilling dreams. Families are getting into homes. So we tend to go over on our time. So I'm going to push to the next one because at the end of the day, they all tend to wrap up. You know what I mean?
Mm-hmm. Absolutely.
So, Sandra, what is your advice on them not getting pre-approved early enough? Generally, we see like the 30-day cycle. I think I want to buy a house. I like the way that it looked. Let me go to a lender. What advantages are there to them coming in, let's say, 90 days prior?
So the first thing that it does, it's going to provide a realistic look of how much you can really afford and be in the market to look for. So what you don't want to do is be in the market for 150 and be frustrated that you can't find anything when you can really be approved for 200, or vice versa, be in the market for 200, 250, but you can really afford 150. So that would be the first thing. And then the second thing, it really provides us a look at if you're looking to move in the next 30, 60, or 90 days, and there's issues on your credit, it gives us time to do it. It gives us time to look at your tax return and see if there's any issues, especially around this time, that we can maybe go ahead and fix for this coming tax year. So it just gives us a lot of those things that we need to work on ahead. And this is the perfect time to do so. If you're getting prepared to buy a house sometime around April, May, June, July, it's the perfect time to do it.
So I want to bring something up, which the terminology might be a little confusing to them, but me and you can both vouch that this is something that really brings up a hiccup in this time of the year, right? 4506Ts, right? So Right now, they're filing their taxes. They're giving themselves, let's say, a 25 or 30-day window, but they're filing their taxes and it's not being reported quick enough, right? Because they're still reflecting. So during this time, wouldn't it be great if they're buying in 60 days for them to be upfront about it now so that we can have enough space to get those things reported in so we can fund the loan, right?
Absolutely.
Perfect. So moving on to the next one. This is, I don't know if I want to call this a mistake, but this is just, I guess, not being advised correctly. So they tend to want to max out on their mortgage limit. let's talk a little bit about DTI on that one and what that generally looks like. You want to cover that one?
Yes. So I have a contradicting view on that, because even though we don't want to max out the price, we are in a market where sometimes it needs to be maxed out based on where our rates are falling into right now and all of those things. But I think most importantly is if we qualify you for your max, let's say it's 300, but really you don't even feel comfortable with a payment of $3,000 or $2,500, then we don't suggest for you to max out, and we'd rather you just pick something that's affordable to your payment, and we can guide you to see where that falls around, and then make the correct choice when it comes to that, because you definitely need to prepare for other unrelated expenses that come with buying a house.
100%. So I think the professionalism of the people that you surround yourself with is probably going to be the one that's going to help you with that. And obviously what I'm saying is the same thing that you mentioned is, at the end of the day, the question that I like to ask my clients, and you do too, when it comes to the money, it's, hey, listen, what are you comfortable paying, right? I mean, what are you okay paying when the love of the house of that new build passes, and 2 years later on, what's the number that you're going to be okay writing on that check so that you can go pay your mortgage, right? And lining yourself up with, like Sandra or myself, the right lender, right? And then us lining you up with the correct realtor is super important, because we all work together as a team to say, you know what is it that you're okay with? What is it that you're comfortable with? I literally this morning, I literally got an application in. I did the pre-qual, and the client qualified for over 400,000. Guess what? She feels comfortable with a property that's under 200,000, because we want to get to a specific number on her monthly. So that's really the point that we want to get across. So how about this one? I think my realtors are going to really appreciate the next one, because they're the ones that have to really deal with this one all the time. Your emotions control your decisions.
I'm gonna hand that one to you, because I think you can relate to that a lot more on that realtor side.
I can. As everyone here knows, I'm a former broker. I used to be on the real estate side, and now I'm a lender. Well, guess what? In that time, Sandra and me were still in business. I was working on one side. She was helping all my clients. So we would have to work together to kind of tell our first-time home buyers, hey, listen, at the end of the day, we're going to go out there. If you're going to have a multiple offer situation, understand that we're going to try to position you to win. Yet, sometimes we're not going to. I mean, I've overbid several times on homes. Sandra's seen it on her side as well, when I tell her, hey, listen, this is what we're looking at. And at the end of the day, preparing yourself in the beginning to understand, or to have a better understanding of the climate of the market, is super important. You don't want to make emotional decisions because you're feeling desperate. At the end of the day, there are more than enough houses on the market. There's a house for everyone. Even though it is a seller's market, there is a house for everyone. If you're working with the right professional, you'll be able to have enough opportunities to get in. Quick shout out to Lani. She's my homie down here. And by the way, she's the Mama de la Golda, which is the baby of the crew. So more power to La Golda. And Lani, by the way, I hope you're getting better. I know you're super sick right now. All right, so let's see. She is actually asking a question. We want to cover this for her, because her and her partner are actually thinking of in the near future maybe getting into a property. She says, I may have missed it, but how much should you have saved? So Sandra, you want to cover that one, because you did really well on the whole concept of the mortgage and how much you have to put down.
So depending on the program that we want to be on, I usually recommend to have at least your down payment 3 to 3.5%, depending on where you're going to qualify for. If you want to be really good on the safe side and you want to save up for the down payment and the closing costs, we would recommend for you to be around 7% of the whole purchase price. So if you're looking at somewhere between 200,000, then maybe have 14,000, but then again, that's a huge number. And so I don't want people to get discouraged by that, because with as little as just 3% down, we can basically line you up with the correct people to help you get those closing costs, to help you and maybe get into the home, depending on where the purchase price is going to be, anywhere between 8, 9, or 10,000 in the door. But it just kind of depends. I just don't want people to think they need to have 20% down. in order to get to a house. And I don't want them to think they need to have all this money saved up when there's options depending on who they're lined up with.
Exactly. So just so Lonnie understands, especially Lonnie, I believe you're on the border of Miami-Dade and Broward. There are programs in between Miami-Dade and Broward, and things like Home Ready and Home Possible are still here as well. They're available here. We just obviously need to find the right area so that we can work the numbers in a way in which you have to bring a little down. So I really do appreciate the question. And anyone that's watching, if you have any questions, please post them up. This is what we're here for. Me and Sandra are both lenders. We cover all of Florida, and we really want you guys to be educated with this process. So moving on to the next one, we covered the emotional part, but waiving contingencies without understanding the risk. So I'll cover this one. I'll throw some at Sandra, but I have a lot of experience in my past with the contingencies part. So a lot of the times in a seller's market, the buyer gets a little bit desperate because they've looked at multiple properties or the properties are coming off the market quickly. Well, the seller's agent sometimes does want to leverage the way that the market is and maybe ask for you to waive, let's say, an appraisal. Well, an appraisal an appraisal contingency that you have in your contract is something to protect you when it comes to the full-on negotiation, the full contract. The appraisal is there to make sure that you are going to be in a position of equity getting into the home. So if you are waiving that contingency, then all of a sudden you have a contract and you're stating that you're going to purchase this home, whether you're in a position of equity or not. Okay. So that's something that is super, super important. Something else that you have to keep in mind is something like an inspection contingency. Sometimes people want to shorten the amount of time in their inspection contingency, and that's completely fine. I was a very aggressive realtor when I was one. And at the end of the day, I used to sometimes put 10 days or 7 days instead of 15 to make it a more lucrative offer. However, understand that you should not ever waive full on your inspection contingency, because that's really a chance for you to take a look at the property and see what's going on. After that, you will have the opportunity to renegotiate. Or at the end of the day, you'll be able to say, you know what, the inspection came out with this, and I'm completely fine with the condition of the home. Your realtors will work together, and you guys can still go ahead and close. So there are about 26 negotiable terms within a real estate contract, okay? So there's several contingencies, and there's contingencies that are written on what is now the FAR Bar 5, and some that are not on the FAR Bar 5 that you should speak to your professional about what contingencies should be added and which contingencies should not be there. All right. So you got 2 cents on that one, Sandra? I think I did pretty well on that one.
I think you did pretty well. I mean, it just comes down to the fact that, get your inspections done in time, because I know there's appraisal contingencies as well. So we want to make sure that we as the lenders don't miss our side of the contingency, because the sellers tend to get really mad at us. So I would rather not go through that. So it's really important for you to get with the realtor and kind of set that expectation when it comes to inspections.
Excellent. Yeah, 100%. I'm with you. So the last one that we want to go ahead and cover, and this is one that actually happens a lot more than we would like it to. Okay. And I think this is why both Sandra and I send out that list of do's and don'ts, especially the don'ts. So allowing your credit score to change before the close. Okay. So I'm going to preach a little bit here, Sandra, and I know you're going to want to preach as well. Sandra and I both have gone through the situation of, we're buying a new house. We're so happy, Mr. Lender. Great. We're helping you. By the way, why was it that you got a brand new car 3 weeks before you're closing again? That is a stressful situation. When you're in the process of buying a home, it's super important to keep your credit basically where it's at. Believe it or not, even rises in your credit score that are too sharp are questionable, and they would even give us issues with that. So we want to keep the window right around there. Keep making your payments the exact same way. If we had an original approval on that, we want to stick to that until we go ahead and close. So go ahead, Sandra, your turn to preach.
Buying furniture. That's my favorite. It's like we're a week away from closing, which is when we do our refresh, 10 days before our closing. Hey, so when am I closing? Because I'm getting my muebles delivered on this day. Wait, what? What did you buy? Oh, wait, I just did your credit refresh 10 days before. Wait, why is there an Ashley Furniture inquiry? Now, not only do I have to send you a letter to explain why you inquired on your credit, even if you didn't get a credit card, but now we're adding more stuff to the process. Now we have to provide a statement, make sure you qualify with that new payment, and then most of the time is dead. And now we have to completely restructure the loan, or now all of a sudden we need to put more down payment or do something crazy in order to make this loan qualify. And you won't believe how many times it happens, mainly with the furniture, and you tell them not to do it, and they go and do it.
Do it anyways. I know. So my first time buyers out there, this is truly not about beating you guys up. This is about informing you, because there's some of these things that some of our family members might try to encourage us. Hey, no, compra lo mueble nuevo, no te preocupes, cómpralo, get them ready. No, that's not the right piece of advice. Reach out to Sandra or myself to say, can I buy the muebles? So that we can say, no, do not buy the muebles, please. Just wait a week and we'll close, and then we can buy the muebles, okay? So those are the points we wanted to cover today. At the end of the day, this is Sandra the Beast Cardenas, my right hand. She's what holds it down for me in the Tampa market. I'm Freddie Baez, the VA Geek, as you guys know. Anything else you want to add before we say bye?
No, I think we covered it all. Just, keep being great, keep taking care of your credit. I think that, don't be discouraged from buying. Just ask as many questions, talk to a professional. Sometimes we don't need to go through the credit route. It's all it takes is a conversation for you guys to understand where you stand and what you're possibly looking at. So don't be discouraged. Don't be scared. Don't think you don't qualify. Make sure you talk to people that know. Don't listen to what your neighbors say. Listen to the professional, and let's get you in your new home this year. Excellent.
So quick shout out to everyone and an update. Within the next 3 or 4 weeks, we're going to go ahead and actually bring on a credit expert. We'll also be bringing on a professional realtor, and we do have a home warranty company that's going to be coming on the show, telling you a little bit about what their value proposition is and why those professionals are super important in the process. All right. So make sure that you tune in. I am going to start sending out notifications 2 or 3 days prior. That way you guys have it on your side. All right. So I really appreciate you guys tuning in. I know Sandra does as well. So we'll see you next time. Okay. Bye-bye.
Thank you for tuning in. This public service announcement is brought to you by Freddie Baez Calderon, your local expert for all your mortgage needs. If you have any questions or concerns, please feel free to reach out to Freddie and his team. Be, do, have.